Welcome to our Talking Business in China podcast by crayfish.io, a space for an expert's take on growing your business and succeeding in the Chinese market. Here are your hosts, Ting Zhong, founder and CEO, and Ge-Yang Huang, Director of Business Services at crayfish.io.
Hello, Ting. How are you?
I'm good. Very busy.
Yeah, always busy. We're going to talk about working with Chinese investors in this podcast. What a coincidence. The UK International Investment Summit is being held today. I was listening to Prime Minister's speech. He talked about the UK is not only open for business, but also a right place to do business. That sends a very strong signal that UK is welcoming international investment. To me, that should also include investment from China.
Indeed, this is very positive news. But of course, we as the practitioners in the UK-China business and investment space would love to see more policies from the UK government to encourage international investment.
Yeah, I know you're working on a couple of projects involving fundraising and also M&A between China and the UK, which I thought it would be a good topic for us to discuss today.
Yes, indeed. One of the projects that I'm working on is to help a UK medical technology companies to find a Chinese corporate buyer. And another one is exploring early stage tech fundraising opportunities from Chinese institutional investors.
So, considering the current geopolitical tensions and market uncertainties, how are you finding the appetite for Chinese corporates to invest and acquire UK tech companies?
From what I can see, there's less appetite from Chinese corporates to do investments and M&As in the UK compared with a few years ago, before Brexit and before COVID. There are a number of reasons, including after Brexit, UK is no longer seen as so important as a stepping stone into EU markets. And currently, the poorer state of geopolitics leading to a much less friendly political environment and less collaborative mindset in the UK for Chinese investors.
I agree. I think UK-China relations have been strained in recent years due to a number of geopolitical issues. This has led to greater skepticism and scrutiny of Chinese investment from regulators and media, hence impacting public perception and business operations. My past experience working with Chinese corporate investors is that they always prefer to acquire a controlling stake of a UK company to being a minority investor. Is that still the case these days?
Yes, but this has changed since the National Security and Investment Act, known as NSIA, entered into force in January 2022, which impacts acquisitions, including significant investment into the 17 areas such as advanced materials, AI and quantum technologies, telecommunications, and cybersecurity. Because of this act, UK government can now scrutinize and intervene in foreign investment decisions that could pose risks to national security. For example, investment into and acquisitions of tech companies in semiconductor sector are often flagged for review. So while some of the Chinese big corporates I know are now investing as minority shareholders so as not to trigger the NSIA, others are totally giving up investment into these areas in the UK economy. However, in non-sensitive areas, the interest to buy a UK company is still strong. In the last few months, I have received interest to buy UK companies in professional services, EV supply chain, educational provisions, and even in cosmetic surgeries.
I see. So what about the other side? Do you see increasing interest from UK tech companies in raising funding from China?
I would say there's less interest now compared to a few years ago. From my own observations and the inquiries we received recently from UK companies. Again, the NSIA, which is the National Security and Investment Act, has a big impact here on UK startup and scale-ups fundraising. And so the tech entrepreneurs tend to not to start with fundraising from Chinese investors due to the perceived difficulties with regulatory hurdles, but also due to language and cultural differences. Some tech scale-up have taken UK venture capital in previous rounds, and typically they also hesitate to raise from China due to US-China tensions and potentially being excluded from supply into the US government and strategic sectors. Having said that, I have seen more interest from the clean tech, climate tech, agri-tech, meditech, and healthcare sectors, where there's a lot more political goodwill for the UK and China to collaborate.
Mm-hmm. From the UK companies I have interacted with, one of the reasons that they're interested in Chinese funding is also about the opportunity to access the Chinese market. Establishing relationships with Chinese investors can often provide a smooth entry into the market. In terms of UK technology companies seeking Chinese investment, what are the things do you think that they need to be aware of, Tim?
There are a number of things. First, the company needs to own cutting-edge tech with intellectual property that's leading in the world in their field. This is because China has now become more advanced in many technology areas, and the investors would only want to work with the best in the class. Secondly, they should be prepared to show commitment for doing business in China in the medium term, if not immediately, as the Chinese investors would expect them to do so in order to reap the synergies after the investment. The funding process can also be long due to language and regulatory differences. So don't expect a quick deal. For example, while the UK CEOs sees a term sheet pretty much stipulating all areas that would happen when the deal goes through eventually. But for the Chinese investors, this may just be a starting point, and everything could be renegotiated depending on the outcome of the due diligence.
Okay, that's not totally surprising to me. In addition, from my previous experience advising trade investment between China and UK, we always advised both Chinese and British companies to be aware of the compliance with regulations and national security laws. So while Chinese investment offers UK technology companies significant opportunities for capital and expansion into new markets, it also brings a range of challenges. So companies must carefully assess the regulatory, political, and cultural factors, as well as safeguard their own intellectual property. So in short, balancing all these factors will be key to forging successful partnerships with Chinese investors. We've talked about the opportunities and challenges of working with Chinese investors. How can a UK company go about to find the right ones for them?
This is best to be done via mutual contacts or warm introductions once the target investors are identified. The Chinese business culture very much focuses on trust. So it's very rare for Chinese corporates to invest into a company that just approaches them out of blue. So either through your own contact books or hire someone who has access to your target investors. So here is where Crayfish can play an important role. Typically, a company will already have a list of potential names to approach for either investment or acquisition. But we can add to these names through more research, especially some of the fast-growing new entrants into the sector that may not be within the radar of the clients. For example, in the case of the medical tech company we are now working with, the CEO had been wanting to get in touch with top Chinese medical devices and medical software solution companies. With our research, we added some health check service providers who are actively looking to expand into the medical device manufacturing, and therefore they are more keen to acquire an existing technology to help them realize the goal faster.
So in terms of challenges, what are the challenges do you think UK companies would most likely to encounter when they try to secure a Chinese investor or buyer?
I would say the first is the understanding of the decision making at the Chinese side. So Chinese corporates have a steep hierarchical structure. So while the analysts or middle managers can show a lot of enthusiasm, the deal can take a lot longer to get to the material stage where decision makers are informed and bought into the benefits of the investment or acquisition. For example, the project I'm working on at the moment has taken over 2 months to reach the final decision makers at the Chinese listed companies after making the initial approach. But it's quicker with the smaller and private Chinese companies, or when we have direct contacts with the decision makers already. So if a UK company needs to find a quicker buyer, then I would not recommend looking for a Chinese acquirer. The same case if the UK company wants to close a funding round quickly, then I would not recommend to look for a Chinese investor, unless the company is already very well known to the Chinese target buyer or investor. So another challenge for UK companies to be aware is that it's not easy to agree on the value of the company for acquisition, like in many deals, but particularly with Chinese buyers, this can be more challenging. Unless there's a bidding war, typically Chinese buyers negotiate very hard on the value and in several rounds. And this can happen across the decision-making layers. So the UK business owners should also be aware of that. Finally, there are culture challenges, as you could expect. And this would be a misunderstanding between the two sides. Personal contacts and face-to-face meetings can help reduce or overcome the challenges.
I agree. The culture side can be very important to the success or failure of a deal. And the importance of cross-cultural communications is often overlooked. So there are significant differences in business practices, communication styles, and decision-making between UK and Chinese companies. And also language barriers and difference in negotiation styles can also affect the deal making. I think it's the patience and the adaptability are essential. So as Chinese investors may have different expectations regarding timelines, negotiations, and due diligence process, etc. But at Crayfish, we're always ready to help bridge these cultural gaps.
Yes, and a big part of our role is that we help our clients with preparation for due diligence from the Chinese investor or buyer. Chinese corporate investors and buyers are still relatively new to the overseas M&As, and so their DD process can be very different from those by their Western counterparts as well. We have the experience of working with Chinese investors to carry out tech, finance, and commercial due diligence in the UK and Europe, and therefore we can help our clients better understand these requirements and better prepare. In addition, we can provide transactional support in both UK and China, whether this be inquiries to the data room or commercial issues coming up in a negotiation of term sheet. And we do that in the same time zone with the client, as well as the Chinese investors.
Ting, we're now approaching the end of 2024. What is your view on Chinese investment into the UK tech sector in 2025?
Well, we have seen some Chinese institutional investors coming to set up in the UK recently. For example, only a few days ago, Hongshan Capital, previously the Sequoia Capital China, is opening an office in London to seek investment opportunities in UK and Europe. We have also been receiving inquiries from other Chinese venture capital firms who are expressing strong interest in securing deal flow from the UK to China. On the other hand, I'm aware of some Chinese corporate investment into the university startup funds here as a financial investor. And I think there could be more interest in that in the coming year. In the current state of UK-China relations, investing into UK's spin-out funds is perceived by the Chinese corporate as a less risky way to tap into the UK's innovation space. So in 2025, I would expect to see more Chinese investments, including acquisitions, picking up again, especially in sectors that are non-sensitive, such as EV, energy storage, consumer electronics, medical device, and environment-friendly materials. So improvement in UK-China relations would encourage such investment from China.
I agree with you. In fact, some Chinese companies are stepping up their going global efforts due to a very competitive domestic market. This can be achieved faster through investing into or acquiring UK companies in the target sector. So there could be synergies between such Chinese companies and UK tech firms seeking Chinese investment and exit. So stay tuned and watch this space. Let's hope for a more positive outlook for 2025.
Yes.
That's all for today. Thank you for listening to our podcast, Talking Business in China, hosted by Ting Jiang and Gear Young Huang. If you like this podcast, subscribe, like, and share. We discuss all aspects of driving business growth in China. Your comments, suggestions, and questions are always welcome. Do get in touch. Our website is crayfish.io and our email address is hello@crayfish.io. You can find us on LinkedIn, YouTube, and X too. It's crayfish.io.